Welcome to the Twomey Stock Market Report. Today is Thursday, June 30th, 2022, and I'm James Twomey. Now, let's see, our sell buy alert. I want to get this out quickly. There's going to be probably slow trading going the next several days, well into next week due to the holiday and the height of the beginning of the meat of the summer. So we did get stopped out of all our long plays except for one or two, but we'll go over all those. ILF, XLE, UNG, we all got stopped out. Many were they're stopped out below. At the open, they opened up below our actual stop, so you may have gotten out a little bit lower than our intended stop, which is a little unfortunate. ILF, we may be back. I'm not sure, but we're going to keep an eye on that because it it looks like we're kind of bouncing off this last couple of lows, but we need to see how that develops. XLE, the energy ETF, that same thing. It bounced off the 200. That's why we got in, and it looked like energy was pointing towards a potential pop, and it could be a spectacular rise. But in this case, we didn't get it. But it's coming back to the 200 EMA. We'll see where that goes. And the reason why I'm not sure is because if I look at natural gas, the U.S. natural gas, this is the daily chart, of course, that closed well below the 200 and kept going, and with high volume. So the energy sector is starting to show weakness, and SCO is the short of the U.S. oil. That is, and has changed and gone positive on our all-in signal. So I have yet to call that, but at this point, it looks like we should. I want to see how things develop after the holiday, and then we may be taking a short position here. Again, another risky trade, but that's what I'm looking for. Okay, let's go on. So on the watch, TBT, TBF are short of the 20-year bonds. We're nearing our sell all signal. Let's look at TBT, the 2X. This is the daily chart. I'm going to blow it way up, and you can see the 9 and the 14 EMA are touching. So we've gone well below the 2-week trend track line, and it is right at the 50 EMA. We need another day for confirmation, but we may be getting all out of this, which is very interesting. We look at TLT, which is the long side of the bonds, which means yields are actually coming down. And yields did drop quite a bit, and they also dropped in Europe quite a bit, one of the largest drops. So that's interesting. That's saying the stock market, is forward-looking, and it's looking out at a potential abatement of raising of rates. I can't see it, but we're going to watch it very closely. And TLT is the 9 and 14 EMA are touching. The MACD's up. We may get this, we may not, but we're going to keep our eyes on it. Okay, and then let's see, the stochastic. It's moving. Whoops, that's not the stochastic. Stochastic is up high in the 70s, and then MACD's up, and of course we are above the 2-week trend track line. So we may be going along there, the opposite, but we got to wait for confirmation. The other thing, XLV, which is our healthcare sector, defensive play, right? That has also crossed and then given us a buy signal, right? You got the confirmation yesterday. Was weekday, but then today it did give us the confirmation. So we may be going along there, but we have UNH, which is a proxy of that XLB. So we may just take the UNH, but we'll see how this shakes out. XLU utilities. Unfortunately, we probably should have kept our XLU, and it would have been just fine. We are nearing a cross point. Looks like it's flattening out. I'm not saying it's going to cross, but let's keep an eye on that as well. And there's some other plays, but I want to wait until next week to see where that's going. Our stock charts, we got stopped out. ILF took a 3% loss for almost a 5% loss in XLE and a 10% in UNG. As you can tell, energy is just very finicky, tough to trade, and you want to use small positions. UNH was still in it. It's a little bit of a bump on the positive side. I've raised your stop to 505. We're kind of asking to be stopped out at that number, but if this market goes south real fast, there's no sense. UNH may slowly get to that 505, but we'll see. You may, if you want, and things are okay, Monday, Tuesday, and Wednesday, you may want to take a third off if you're concerned. I don't know how big your position is, but we're close to. We've got a close stop there, which is most likely going to get kicked off if there's any downdraft. Let's see. Our other table, Verizon up 2.5, original third remains, and we did add some the other day. TBT, we talked about it. We had been adding on down days if it opens up lower than when it opened up, and we did take our third and a third off for some positional profits. Same thing in TBF, the one times the negative, the inverse of the Barclay 20-year Treasury. PSQ, we're up 8.2. I added today when the market kind of rebounded a little bit off the lows, and same theory goes there. If the market opens up Tuesday or Wednesday and it's up, a couple hundred points at the open, you want to watch it, and by 10:30, 11, you may want to start adding to your shorts unless it races off to 900 points up. But I'm not sure where the market's going to open. If it opens up down, unless you really want to open up at the open, I think I'd wait next week. Very minimal trading as far as volume, so you got to be careful. Dog, which is the inverse of the diamonds, the short side, we're up 5.9. I added to that as well today. And then the SPY, the short side of that is SH. We're up almost 8% there. Added a little bit today. And the RWM, the same thing on that. And that's actually up pretty good bump that we got today. SJB, our junk bond trading proxy, that is up 1.5%. And it's a slow mover. It did have a nice rise, but it's a slow mover right now. I looked at the sector table. What's starting to develop, if you look at the last 5 days, right? Industrials, utilities, healthcare. Utilities and healthcare are very defensive. Industrial is interesting. I'll have to take a deeper dive in that, and I will. I don't want to take the time here today, but I'll look at it later. As you can see, materials and energy at the bottom, communication is starting to drop. But if you look over the 1, 2, 3, 4, 5 columns over the 20-day and the 1 month, if you notice, everything's in the red, right? And pretty much of the best is on the 1 month. We've got consumer staples 4 down 4 as the best performer. If you look at energy, down 14. So we've really are at the point where everything is just getting beaten down. And that's why I'm saying, at this point, being a little bit light, holding our shorts. Maybe, if there's some bounces we want to add to the shorts, but this isn't over yet. And as far as the good news is, number one, we haven't seen the layoffs propagate yet. So if that doesn't, that's terrific. Number two, we're still holding steady with some of this energy decline, and that's starting to take root. That could be mostly forward thinking, and the futures are saying, hey, demand destruction, so there's less demand, or maybe they're thinking something is going to pop and add to the oil sector. I'm not sure. The other part is the bonds. The bond yields are dropping. They're dropping pretty quick. I would say that's mostly driven by not the lack of inflation, but and part of it's forward thinking. They're saying, hey, Fed's not going to be able to or have to raise as fast as they're talking about. But I'm not in that camp. But I would say it's more of people are saying, I'm out of the market. I'm getting into the safety of bonds. They're buying up the bonds. The more bonds that get attracted by the investor community, you know, it's maybe driving down prices that way. Hard to say, But if you don't have to pay a higher bounty to attract the buyer, right? You'll offer them less. If there's plenty of buyers at the window, and they're screaming for 3.4% on a 10-year, and you're saying, man, there's a lot of people behind you. Anybody want to do 3.2? And a bunch of people run to the front of the window. What do you right? That's the logic there. So we've got a lot developing. We talked about adding to short positions. Advanced decline, no surprise there. Decline, is coming back. It didn't even make the 50 EMA, which is kind of surprising. I really was anticipating it would, just be the way the relative strength index was climbing. But it's going into a long weekend. Volume's low. We're at the end of the month. Typically, new money for 401k starts coming in. Most likely, that'll be after it'll be into next week and the first couple of days of trading. So we might get a bounce the first couple of days, but we're going to see. Overall, it's going to be light trading, and we want to de-risk ourselves at this point. Some of our mouse hunt plays to play something long, we end up losing money on those. So at this point, I'm not in a rush to go long on too many positions. So that's where we are. We'll do a deeper dive. We talked about bear markets. So I'm James Twomey. That gives us a good idea for Thursday going into the weekend, gives us an update of our trading tables and our trading philosophies. And as things propagate the next several days and into next week, we'll have some time to do a deep analysis while the market is settling over the vacation week. All right. Any questions, you can email me at jim.netsearch@comcast.net. I can be reached at Twitter at Twomey Stocks. And, of course, any input on previous segments, terrific topics you'd like covered, let me know. I've got some great suggestions that I want to follow up in the slower parts of the month. And then in addition to that, if you like what you see, hit the like button and also hit subscribe so you get these alerts. Thank you very much. Have a great evening.